What's going on, folks? Dan French here, Property Land. You guys know me. I'm a real estate agent out here in Las Vegas, but we talk about a lot of different things. I really enjoy putting out videos, and welcome back to the channel. A lot of people out there have supported me and stayed with me, and I appreciate a lot of those people that still call me and use me as a resource for real estate and financing related. And we do have a lot of other channels too. We got a podcast that I do, just a lot of different things. Now, want to talk today about some things that's been brought to my attention, and it's problems with rates going up with people that have higher credit scores, and how is that going to impact people out there looking to buy a house today, especially if you've done the right things. A lot of people don't understand that when you're looking at credit score, you had to sacrifice a lot to get that score out, right? To keep that score up. Some people, they just don't care and have let their credit score suffer. Now, what's been brought to everyone's attention over the last few days is the Fannie Mae and Freddie Mac are going to, I wouldn't say reward, but have less adjustments on people that have lower credit scores. And you ask, people are saying, well, why is this happening? Why would they do that and then also affect the higher credit score ratings of a 680 or higher, or just people in general that have had higher scores to keep their credit good? And it's because they want an equal level playing field, right? So is that going to entice more people to go into buying a house if they have a good score or not? Probably not. I think this is going to be a real big problem. It's going to slow us down, possibly even more, right? And it's because, why would I want to go out and buy a house if I've done all the right things and now I'm getting higher interest rates, paying it over a long period of time, right? As far as it could be a 30-year fixed mortgage. Why do I want to go in and pay a higher mortgage payment and get a higher rate, depending on how much money you put down? That also is a considering factor. And so my opinion, is this going to affect the market? Absolutely, it's going to affect the market. Why would it affect the market? Well, I think what's going to happen is people already have negative feedback, negative thoughts. A lot of them, consumer confidence is low. You still have people buying, but you can also say that, for the situation of people still that wanted to buy that were on the fence, this may push them off of not buying altogether, especially if you had a real good credit score. This came out recently. May 1st is what I've been hearing is going to be the time period of when this gets started. And it really is just about rewarding, I wouldn't say rewarding, but making it easier, equal level playing field, making things a little bit better for people out there to get into buying a house. You think 1/3 of the economy, gross domestic product, is housing, right? So what is the Fed and what is the economists and people looking at what the Fed's doing here is trying to get more buyers with lower credit scores back in the market to buy homes. And, hey, you know what? I'm all for it as far as that goes. That part of it, that's okay. But why do they got to affect the other side, right? Why do you got to affect the people that have good credit scores? And those are the ones that are probably sitting there thinking, well, man, why do I want to get into a mortgage now? All-time price homes, they're already at an all-time high. We have rates and prices of homes and payments really high. Not saying it's a bad time to buy for everybody, but you got to look and see, there's a lot of pros and cons here. And at some point, people are going to just say, I'm just going to hold back, which a lot of them have when you see these house prices going up. Now, is it going to have a negative impact on mortgages? Absolutely it will, right? I think it's going to have a negative impact because now, as your mortgage lender, you're going to be shopping for a rate even more today, because now if your rate goes up and you're paying a higher premium now, if you're a 680 or higher credit score, you're definitely going to be looking for the best rate that's out there. So I want to go over this, looking at some of these changes that's going on, that's going to happen on May 1st. Credit changes to mortgages. You look at for sale. We talk about a lot of people that, may have gotten into the house. You can see that it's 1.75% fee discount on a 620. The Fed wants to, help people out. And there's a point where I think it's fine to do that, but at what cost? Do you want to affect the other side, which, when I say the other side, that means people that have taken their credit seriously. I'm not saying people don't come into challenges, because we do. We've all been there. I've been there, right? But it's really about, you can't punish, I would say, or, penalize a person that is out there doing the right things. And all of a sudden you just kind of slip this in and say, hey, guess what? Your mortgage payment might be $40, $50 higher. Now, is that going to push people out together, from the market altogether? I think there's a lot of 2-1 buy downs, so it's not going to really affect as much as people think. Also, who's going to get into a house if you did have a lower credit score, and is it going to default, right? Because now you're putting people in houses that may not afford it. And so I think it's going to be a very small percentage. I don't think that's going to really be a big play on that. But I do think that what's going to be a bigger part of this is what is the effect it's going to have on people that maybe were on the brink of getting approved for a house. I understand there's a 2-1 buy down. I understand people are buying rates, but you have to think there's only so much you can buy the rate down. And then you look at it and you say, well, is it really going to impact each individual? I don't know if it's going to impact them significantly, but I do think the psychological position that people are in is it's already to buy a house, hard to buy a house. They're already in a position where they're on the fence. Should they just stay renting or not? This may push more renters just to stay renting if you have a good score or not, right? Now, it might push more buyers into the market, 620 or higher, but you have to think, typically those buyers, not all, or have a little bit more challenges, right? They're maybe not as positioned in life sometimes, or maybe they have more struggles that they're trying to overcome, but they're going to get there at some point. But to increase that, there's nothing wrong with that. I think that's okay. Do I think it's going to be a big percentage of people that's actually going to help them in that lower credit bracket? I don't know. I don't know if that's going to really jump or spike as much as they think it's going to be as far as the Fed goes. Now, when you look at the other side, I think that's going to have a bigger impact where people are going to may push out or may not want to buy a house because they're now thinking, and this might be just a position thing. Maybe time will heal that. I don't know, but I do know that if people understand what the market's going on, or what's going on right now with the Fed and how Fannie Mae and Freddie Mac are raising these loan level adjustments, then it might push people out, and psychologically, it might take a few months. Could be 6 months, 8 months. I don't know, where people start to feel that we can go ahead and take on that adjustment. Again, a lot of people buy the rates down, so I don't know if it's going to have a huge impact either direction. I think they're looking at it, maybe thinking that it's going to spike up more people that with the lower bracket to buy homes. Now, I do want to bring up a couple of things here. When you look at where we're at today with prices of homes here in Las Vegas, 425,000, we've leveled off. And a lot of people ask me, they say, Dan, where do you think this is going to stop? Are we going to keep going? And everybody thinks, well, it's going to keep dropping. And I'm not saying it couldn't, but I do think that there was a level here in December. We're all the way now into March, and that's 4 months of straight, basically flatlined. We flatlined at 425. And why did we flatline? Well, the supply was real high at that point in December. I think it was pretty good size supply here we had, and more people. Now it's getting hotter, so equally rates have gone up, so it's slowed and paced some of those buyers down, but yet you still have buyers that were already in the market that just push forward. And I think with the weather getting hotter, people are now in the market trying to get homes again, right? So it's a give and take. It's more of a balancing act right now. I think that what you're seeing out there is consumer confidence is a little shaky still. I don't know. I think people right now may feel that they're going to kind of wait to see. Anytime there's something drastic or something changes like this, where the Fed comes in, or Fannie Mae, Freddie Mac makes adjustments, or interest rates go up, depending on how much you put down, it's going to be determined on how much you're being charged for that loan as well, that you're going to start to see adjustments and changes happening mentally for people too. You can't just go back into a market and just say, oh, well, you know what? I think it's kind of like, let me digest this thing. Like, what is really happening here? Let me get my feelers out and talk to people I know, and that's what I've seen. And so now this may be pausing some buyers out there, and I don't know. I don't know what that whole impact will be, but I feel it's not going to have as big an impact on the lower credit buyers out there. It's going to actually have a bigger impact on the higher credit buyers, because if you have a lower credit score and you're trying to buy a house, you'll typically get it. If you really want to buy it and you don't want to rent, you'll do everything you can at all costs, maybe do down payment assistance, whatever it is. But if you have a choice, right, you have a 680 or higher, and you have a choice to either just, be on the sidelines or push back now because, your payment's going to be higher ultimately, or your adjusters are going to be higher depending on if you put down 5, 10, or 15 or 20%, you're probably going to be asking your mortgage lender, hey, did anything happen here at this point with my payment? What's going on? So you guys know I'm a real estate agent out here in Las Vegas. If you guys have any questions, call me. I'd love to help you out. Check out LV Home Professionals, Dan French Connections is a great place to get started if you want to get started there. You can reach me anytime. I'll have all my contact information in the comments section below. Love to earn your business. I'm a relocation real estate agent out here in Las Vegas, and I will see you on the next stream. I'm out of here.